Cathie Wood just dropped $6.5 million on Tesla stock, and also she said that Tesla stock will be $500 based on her price target without full self-driving. Let me show you. She's saying that the EV opportunity alone is enormous. In that tweet today, Cathie tagged Tasha, and Tasha here is saying, removing autonomous driving and any form of ride-hail, which we believe will drive more than 60% of Tesla's value over the next 5 years, our 2026 price target, which is Ark Invest price target, would become roughly $500 per share post-split based on EVs alone, more than a 4x increase from current Tesla stock price. I stayed invested in Tesla stock because of full self-driving. But now I am buying more Tesla stock, not just because of full self-driving. I believe that there is a clear path for Tesla to double, triple, and quadruple even without full self-driving from where we are right now. Tasha and Sam here, by the way, they work for Cathie, and Sam is saying Tesla's margins, superior drivetrain efficiency, and low battery costs should make it one of the best positioned to weather any cyclical slowdown for autos. As it has done in the past, it can be the first to lower prices, which puts pressure on other automakers. Ooh, Tesla has done exactly that just now. You will see so much pressure building up, and all these other automakers, they are sweating really badly right now.
When they released the Model 3, they had a massive gross margin expansion and massive unit volume expansion over multiple years. I think the same thing is going to happen with the new vehicle platform they announced in March. And so they're going to set the standard for the industry again. The industry will again be 4 or 5 years behind. And for shareholders, it's a great outcome.
Ark Invest is very bullish on Tesla stock, and so am I. Let's take a look at what happened today with Tesla stock. It dropped like 7%, and then it went 10% up, finishing the day about 2.5% higher. If you look at the markets, you would think that Tesla is up because of the markets. It actually didn't go up as much as the markets did, especially when we compare to the technology sector. So you would think Tesla did not do that well today, but you would be mistaken, at least to a certain degree, because you have to look at all of the other EV companies. And you can see that only Lucid went up today, and even then, it did not go up as much as Tesla. And you can see everyone else, basically, including BYD, Tesla's biggest competitor, everything else is down today. If you thought that volatility of Tesla stock was a little bit much, well, just look at XPeng right here, down 15% in one single day. So what happened? Why did Tesla stock drop so much, and then why did it recover? It seemed like Tesla was dropping prices absolutely everywhere. Right here in South Korea, in Japan, then in Australia as well, and then most importantly in China. And these are not small drops. When you look at these here in China, you see it's 11.7%, 5.7%, 10%, 13.4%, 9.5%. These are sizable drops. And if you are a new investor, this does look scary. This is a spreadsheet from Electrified YouTube channel. These are current cuts, and when we compare the current price compared to that in the beginning of 2021, it is still lower. But it is so easy to lose perspective. Check this out. These are prices of Tesla in China, and as you can see, the trend initially was to lower prices anyway. These price increases were abnormal. This was not a part of Tesla's plan initially. This happened because of the virus and because of supply chain issues. So the whole auto industry was in this weird place. We were not in a normal situation by any means whatsoever. So now we are simply coming back to where we should have been in the first place. Because if you look at this trend and just try to, how about you do this? Hide this part from, let's say, maybe you know a 7-year-old, okay? And just ask them to continue to draw this line right here. So hide this part right here and just ask them to continue this line and see what they draw. I bet you that they will draw this. It's pretty common sense. And check out what this pretty decent analyst, Pierre, has to say about the auto market. Tesla can lower prices without hurting margins for multiple reasons. The ramp of Berlin and Austin improves average unit costs, subsidies in the US, and of shipping from China to Europe, so more cars made locally, improving supply and input costs. Pierce says that Tesla can lower average selling price by 8% without a dent on margins. This grows the addressable market by 50%. Because today, Tesla's average selling price is about $50,000. The addressable market is only 20%. If we decrease average selling price, all of a sudden our total addressable market increases to 30%, which would be a 50% increase. So a lot of these EV stocks today have been dropping because you now have to actually really compete with Tesla seriously. Tesla is coming after them. And Buffett probably saw this coming a long time ago, and he has been trimming his position in BYD. And check out what this analyst, Alexander Potter, has to say about this price drop from Tesla. He is a pretty good analyst. And he does have a $340 price target for Tesla stock for basically next year. He says, we have been flagging this risk of price cuts for several months, and as a result, we were unsurprised by the decision. He's also saying that Tesla probably, most likely actually, is able to cut costs significantly. So Tesla went back up today, Tesla stock, because Wall Street expected all of these price cuts already, and all of that was already baked into Wall Street's earnings estimates. Some more good news today about the Cybertruck. Looks like parts are arriving. You can see this one and this one here. This is marked with that company's name that makes these machines that Tesla then uses for gigacastings. We also have a comment from the VP of Tesla China basically saying that these price adjustments that we are seeing right now are in line with costs declining. Tesla China has said a very similar thing about the price cuts in the last quarter, so we will take a look at these margins in the next earnings report, and then if we see margins going down, then I would completely dismiss this comment. Until then, let's see. If this turns out to be the only reason why the main reason why the prices are being adjusted, that would be fantastic, but I would keep my expectations a little bit on the lower side for now. We also have more good news right here. Tesla Model 3 ends Toyota Camry's 28-year streak as best-selling midsize sedan in Australia. Looking at the inventory in the United States, where we haven't had any price cuts just yet, we don't have a $7,500 tax credit for certain makes, and this is why the inventory has gone up. If the tax credit of $7,500 would have applied to all the vehicles, just like we expected before, we certainly would not have this buildup. But I am sure that Tesla has this under control and they are making a plan to do something about this. Note that the inventory increase is not because of Model 3. As you can see, Model 3 inventory level is pretty healthy. If anything, it is actually below a normal level because some people will cancel their orders last minute. So this is actually really good for Model 3. But I certainly cannot say the same thing about the Model Y. Why is that? It is because you cannot get that $7,500 EV tax credit. However, when I select a 7-seat option, which does qualify for the $7,500 credit, there already is a backlog. So Tesla either needs to shift production from the 5-seater to a 7-seater, or Tesla needs to raise the suspension of the 5-seater so that it also does qualify for the EV tax credit, or cut prices, or introduce the standard range Model Y. Tesla will do something here, and they should be doing something like right now. So at a first glance, looking at this, it does look bad, but when you understand it deeper, everything is just fine. And guess which car was the best-selling car in December in the United Kingdom? Tesla Model Y number 1 and Tesla Model 3 number 2. The third place is quite far from number 1. So I believe Tesla's dominance is going to continue. We will have some hiccups in the meantime, and that is totally fine and expected. If you have a very bad recession, I would expect things to not be smooth for a little while. I would expect buying opportunities, which I will treat them exactly like that. Looking at the long-term growth of Tesla stock, it is hard to not feel good about Tesla stock, and these are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Posis. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.